Good morning, everybody. It is Friday, February 12th, 2021, and it snowed again in Wisconsin, in Milwaukee. So, again, I am in trouble for having mentioned the lack of snow a month ago. We are just getting dusted nonstop. My Chihuahua is very angry about it. So this weekend, I am putting out the new Global Trends ETF special report for 2021 and changing up how we do the tactical trading on our ETFs just a little bit. Going to hold her hand just a little bit more with monthly allocations, a little bit more on the ETF file deep dives. We have a new file coming out, how to pick international growth ETFs, another one, how to pick out international dividend ETFs. We have three favorites in both categories, and I think that given I expect one of three things to happen in the next year or two, we should be very aware of the international ETFs that are out there, because that might be where some of the very, very good opportunities pop up as the dollar stays relatively firm, which is what I told you would happen a few months before Biden was elected, is that a Joe Biden presidency probably marked the bottom of the dollar. We have shown that chart several times, and it looks like that's what's happening. And by the way, if you follow my Twitter feed, you know that I'm bombarding Janet Yellen with ideas for a digital dollar, a crypto dollar, and it's nothing she hasn't heard before. There's going to be a digital dollar relatively soon. I'd say probably the announcement will be this year. It'll probably happen next year, and we will see exactly how they set it up. But there is a fairly simple way to set up a crypto dollar. It would involve creating a reserve of crypto dollars. According to the CIA and the Treasury numbers that I look at, we'd probably need about 80 trillion crypto dollars that you could buy with regular dollars. They would be smart to price it at $1.02 to start. And then the Treasury Department would still have the ability to issue treasuries as counter-cyclical policy and to finance the government. And then to facilitate international trade in digital dollars. Remember, the dollar is already the reserve currency of the world. If we peg it to something like inflation, an inflation-adjusted initial reserve, then we can see both the benefits of the digital dollar, just like people are seeing with Bitcoin, and we keep reserve currency status. So my proposal is pretty simple. Create about $80 trillion of digital dollar reserves and increase that supply only by the rate of inflation. There would be no judgment. There would be no manipulation. There'd be no Fed. It would simply be, this is the digital dollar. This is what it's worth. You can convert it into anything that you want, but you can only buy it with dollars. 80 trillion is an important number. We're not going to talk about that today. But at about 80 trillion digital dollars, the dollar would probably remain reserve currency for eternity. And that just plays into the fact that who else would you trust? Where else would you want to be? China, Russia, slow growth forever Europe, super slow growth forever Japan. I mean, Japan might end up becoming like Switzerland at some point. We'll see. Remember, a forecast is just a set of parameters to help you adjust to whatever actually happens. And as things change, remember, they're probably not changing that much. And as traders who just trade for the sake of trading spin out a narrative, especially a fundamental one or a catalyst-driven one or something to do with whatever thing it is they feel like saying, when the traders throw out a narrative, you should laugh at them. You should laugh at them loudly, and you should make fun of them. The narratives that you hear are so bad and so reactionary and so emotionally driven. They're designed specifically to get you to make bad decisions. So ignore traders who tell you why something happened. First off, they didn't make their trade based on why. They were just chasing. They're all trend traders. There's a handful of pivot traders out there, not many. Paul Tudor Jones got super rich trading pivots, but everybody else just chases the trend. I'm a pivot trader. I've done much better than the trend traders in my career. 51-year-old multimillionaire. I work from a little condo because I don't have to have my expensive office in the burbs anymore. Ignore the narratives. They're just trying to screw you up into making a bad trade that they, the narrative spinners, can take advantage of. So how will a correction really play out? There's three ways. We could see that 20 to 50% crash, which is the easiest thing to deal with if you're heavy in cash, unless you get stuck in the headlights like we did last March. At least partially. Bought a really good gold position that doubled. But you have to remember the stock market doesn't like easy. But then again, maybe the millennial traders who've been buying all the calls will start buying puts. And maybe they'll just trade it the other way. Maybe the extremes to the upside become extremes to the downside. Hard to know until it starts to happen. And we have numbers that we can watch that'll help us. We could also see rotating corrections, which I think is more likely given the amount of permanent liquidity added to the global system. Think about 2015 and 16, where the stock market averages were basically the same after 2 years, but different sectors did better after they corrected. And you saw bifurcation in the economy, the type of bifurcation that led to the extreme upside that we've seen in technology, in everything smart world, everything sustainable. And now we have sort of an everything bubble because the liquidity is pushed up even, as they call them on Reddit, the shit stocks. Your shit stocks permeate the oil and gas sector. And yet people talk about, oh, but we're going to keep using oil and gas. No, we're not. And the markets know that, and the smart money knows that. You're going to see demand for oil drop by 2030, and you're going to see demand for gas drop within 5 to 10 years after that. Things are moving that fast. And technology, all these technology companies that have done spectacularly well, they're going to start chopping along. Why? Because as we saw with the internet after the tech crash, right after the bubble burst in 1999, 2000, 2001, 2002, who ended up winning? Yeah, there were a couple of oligopolies that emerged. Amazon, Google, Apple, Facebook a few years later. They were transformative. They became enormous. But who really benefited? The companies that use technology well and supply us with all the things that we have and use, especially consumables, did incredibly well. There's two companies that we're going to introduce. One, they're actually both on the VSL, but we haven't talked about them much. And one I've mentioned in the plug and play. Companies that have streamlined their production process, their logistics, and now all of a sudden their profit margins on some of these old businesses are going from 10% to 20% because of the efficiencies driven by technology. And the market doesn't necessarily recognize all that because it's not sexy. It's not out front. It's not on Twitter. It's not in the trader's narrative to say, well, Spectrum Brands is becoming more profitable on roughly the same revenue. It's not sexy to say that. But by the way, they're almost at price to book. So you take a look at what's going on in the markets, and you should expect a lot more bifurcation. You should expect the zombies to slowly be killed. Any zombie apocalypse movie, what happens? You know, you're scared, you don't understand, you're getting chased by these bloody, crazy-looking zombies that kind of move in disjointed ways, and then the good guys kill them. Usually a little at a time, and then there's a magic bullet at the end. It's going to be the same thing with the zombie companies. They're going to get picked off a little bit at a time, and then at some point there will be a big wave, and it'll take the form of bankruptcies, reorganizations, mergers, take-unders, take-privates, and they'll all just get wiped out in 1 or 2 years. Exxon is a zombie company. People don't want to hear that Exxon is a zombie company, but they can't cover their debt and their dividend without taking on more debt, even at the higher oil prices. Why? Because volumes aren't going up anymore. There's a little bit of a rebound off the bottom from the coronavirus crash, but you need to look deep into what these giant secular trends are. What are the giant secular trends? That's the first step in our 4-step investment process. Look at the big secular trends. Always keep your eye on the ball, and then adjust for what the Federal Reserve and the government are doing. What is the government doing right now? Well, if you've been paying attention to President Biden, you know that he's basically creating a whole Green New Deal without spending any money, just changing the rules. And I think you'll probably see a carbon tax by next year, but they might even slip it in soon. Well, the third thing that could happen is something else, right? You can't foresee it. Could be a combination of these two things. Could see the stock market go straight up another 20%. Who knows? 25% even. My target for 4 years out is 5,000 on the S&P 500. We're almost at 4,000 now. A lot of pundits out there are talking about the next Great Depression. You know, the reason that everybody who sells something talks about bad things is because fear sells. Sex sells and fear sells. So just apply that to the stock market. What scares you and what's sexy? And that's what they're talking about. Do I think there will be another Great Depression? No, I think there will be a financial crisis or two in my lifetime. So does the correction play out this way or some other way relating to all these things that I'm talking about? Probably a little bit of all the above. And that's why it's not going to be easy probably. Now, if we get lucky and the stock market has a big crash because millennials start trading puts, then you just hold your nose, wait for it to play itself out, and then jam the pot. You take out your bucket and you just start catching it. And yeah, there'll be some splashes and you'll lose a drop outside the bucket here and there. It won't feel good for a week or two or 3 or 4 or a month or 2 or 3 or 4. But if we can buy at 2018 valuations or 2015-16 valuations, oh my gosh. I know everybody's had that fantasy about if I knew then what I know now, right? If I could go back in time, think about if we can go back in time 2 years, just 2. Think about what we could do with our portfolios if we went back 4 or 5 or 6 years. So don't think about missed opportunities. Get off of your FOMO because you're not a great trader. You're not. There's nobody on this call who's a great trader. You know how I know that? Because you wouldn't be on the call if you were. You might be a good trader, but that's probably in context to the fact that the market's gone up. My brother and I used to call all these people in the early 2000s, 3, 4, 5, 6, 7, 8, 9, 4, 5, 6, 7, when we were helping start a firm that became, I believe it's the biggest regional firm in Wisconsin now, about $4 billion under management. We were part of the seeds of that. Yeah, we were the grunts. But we would call people who made money in an up market, bull market traders. Yeah, when everything's going up, it's pretty easy. And in fact, when everything's going up, you really don't have to trade that much. People overtrade. Probably just can hold on to your 20 or 30 best ideas and go fishing for 2 or 3 or 4 years. A lot of times that's the right thing to do. Now, the ebb and flow trading with ETFs, yeah, you want to keep track of your asset allocation. But if you have monster stocks, you want to ride your winners. You know, people come to me and say, hey, I'm gonna buy some puts on Apple. Like, why on earth would you buy puts on one of the best companies on the planet? There's way more upside than there is downside. It's like that guy at the poker table who says, I just like 2 6s a hand. Yeah, every now and then you're going to flop 3, 4, 5, and you're going to feel really good about that until some idiot like me comes along and played 6, 7 suited. Oh, I have a better street. Yeah, that 2, 6, man, that was really a great play. You just got unlucky. Play better starting cards. Same thing with the stock market. Play higher quality. Don't bet against it. There's plenty of crap stocks, or the other way it's described on Reddit, that you can bet against. There's entire sectors that stink. One in particular, energy, old energy, fossil fuel energy. So think of those things in the context of whatever it is that's going to happen here in the next year or two. I do think that you're going to have the thimble out multiple times, but maybe we get lucky. So expect a little bit of everything. This is the guy from A Little Bit of Monica. So if you remember that song, Little Bit of Monica, right? That song. That's as much singing as you'll get out of me. There's all sorts of different things that could happen. Expect those 3 to 5% pullbacks. There'll certainly be a 10% correction at some point. We may not get an actual 20% correction because then it's officially a bear market, and everybody hates saying bear market. Never know. The Fed might decide to pump a little extra money that week when it gets close to 19% down. They've done it before. Then again, maybe the market goes straight down 30% like it did in 2020 because millennials decide to flip the switch and, buy puts. We'll see. So where are we now? I think the picture tells the story. Where were we? I think the picture tells the story. Stock market is still delusional. The January effect was particularly strong this year, which I think is a little unusual, but it was driven by a couple of things, right? Anybody see alligator jaws? The margin equation can't stay like this. And remember, you can see the rules change. You can see margin requirements tighten up. It happened in a few stocks a couple of weeks ago right? GameStop, AMC, a few others. And remember, money is made at the margins. I say that over and over again because I want it to really sink in. Money is made at the margins. So when there's call buying pressure, that drives the price of stocks up. It doesn't have to be the boomers doing it. That's relatively static money that's sunk in and starting to trickle out over the last couple of years. The millennials are amplifying their money by using margin and using calls. And then you have the hedge funds, which have had a really good year. Those things always reverse. And it's been happening faster, right? Look at this, and then look at that. I mean, smooth that out, and it's a big V. So who are you? Are you here? Are you here? In poker, we have something called results-based thinking, and I think that applies to a lot of things. What it means is that somebody plays a bad hand but wins. And they say, see, I know what I'm doing. There's an awful lot of people up here playing bad hands, but they're doing well right now. And they're saying, see, I'm right. We'll see. I win an awful lot of poker tournaments against people like that. Tell me they're right. Last two poker tournaments I played before this all stopped, I came in 4th and 12th. Those are my last two. You can look it up on Hendon Mob. Now, those two professional tournaments were basically locals where I played, so there weren't a lot of professionals. It was a lot of okay amateurs and good amateurs. Kitchen table players, basement players, bar players, local casino players. A lot of people who do okay from time to time, enough to hang in the game and have fun. But then somebody like me comes along, or better, and there's, 5, 6, 7, 8% of the poker players are better than me. I'm somewhere in the top 10%, but I'm not at the top because otherwise I'd be on TV. Who's going to win? These people or these people? Remember, rules can be changed. Think the big guys would ever change a rule to stick it to the little guys? So this is one of the funds that I told you about a couple of years ago. This is ARK Innovation. Look at that. So this is more than the January effect, right? It had already been doing pretty well. But again, this is the period of the Fed starting to bail out the repo market. Coronavirus crash, and then the helicopter money that I showed you a few slides ago. And look at this. So is she a genius? Maybe. Kathy Wood might be a genius. Or do you think she's using a process similar to ours? What did she do? She got into the biggest secular trends. The things that I talked about 3 years ago in an article that said the smart everything world can make you smart rich. That was the title of the article. Said it way back there. By the disruptors, not the disrupted. So will this correct? Certainly it'll correct. Into this area makes a lot of sense to me. This jitterbugging here is where there's pretty big support. So you could see a 30, 40% drop here as people took profits, and then people made bad bets against good companies, but in the short term that works because most of the companies she's in are good companies. So if this ARK Innovation gets a good correction, you want to load up on it. So if it loses, gets down to about this point, and I have that price level for you in our ETF update, and I'll actually show it to you in a second. So valuations are at historic highs. I didn't even update this from the end of December. It's higher now. Eventually, valuations matter. Will they matter all at once, or will it be rotational? By the way, remember I told you that we weren't in a V-shaped recovery when everybody back here is saying we're in a V-shaped recovery? Oh, look, suddenly there's almost no jobs growth for 2 months. And that can be expected in the first quarter of the year anyway. So what you should expect is come about April, May, this will start to turn up pretty good again. You'll have construction. You'll have summer jobs. You'll have the impact of a lot more vaccinations. President Biden just cut a deal with Moderna and Pfizer for, 200 million more doses? Remember back in April, May, I said that by the end of 2020, we'd have an emergency use vaccine or two. People told me I was out of my mind. It can't happen that fast. And what did I say about the new school year this coming fall? What did I say would be something that they would do at the schools? They're going to offer vaccinations the first week of school or the week before. So not only will you be getting will you be able to get vaccinations at CVS and Walgreens and through your medical system by then, they're going to allocate doses to the schools. Why? What will be the justification? The kids don't need it. That's baloney. The kids do need it. But more importantly, it's how you keep the teachers safe and make sure that schools are open in the fall completely. And then over the next couple of years, we have to figure out to what extent do we want to use virtual versus in person. And I think the way it's going to turn out is that you're going to have in-person education just like you always have. Then you're going to see a huge uptick in tutoring and on-demand and virtual education after school hours and during the summer. You might see us go to about a 10.5-month school year universally. Everybody starts around Labor Day. Everybody ends just before the 4th of July. You might go down to about a 5 or 6 week summer vacation. It'd be the smart thing to do. Then have a couple of 2-week breaks in there, or three 2-week breaks, correct? That's how you do it quarterly or trimesters. I don't know. Let the administrators figure it out. They need something to do because they haven't done a very good job the last 40 years. But all this impacts the job market, which impacts the money that's available to go into retirement plans, which impacts the stock market. And the millennials are now the forever investor. They are what the baby boomers were 30, 40 years ago. We are going to see a history that somewhat rhymes, right? Largely rhymes, then and now and then. And we have to figure out where that money is going to flow to. And the millennials have basically told us. If anybody's fighting that anymore, I don't know how you are going to invest and survive. You need to be in those sectors of the economy that we talk about over and over again. You must do this. If you still want to own banks, if you still want to own oil companies, if you still want to own smokestack industries, if you still want to own Altria and Philip Morris, you're going to be vastly disappointed over and over again, and you're probably going to lose money. So here are our 5 core ETFs. I'm going to go through those real quick. This is the way that the ETFs are going to be set up in the future. We'll have our core ETFs. Then each month I'll have some new tactical ETF picks for you that are trending in the right direction without being overvalued or overbought. And I'm narrowing down the universe that we work with because, frankly, I don't need to deal with 180 ETFs. We can get that down probably in half. I had originally tried to give everybody something for any type of style. If you're following me, you're going to invest in my style, period, or follow somebody else. I don't want to be all things to all people because all people are doing things wrong. 4 out of 5 people invest wrong, but it's my style. I don't care. Do it right. You know, that type of talk really has gone over well with some of the other people I've worked with. All right. What's your core large cap holding? QQQ. How much of it do you hold at a given time? It depends. But these are your dominant companies in the economy, with the exception of Tesla, unless they make a bunch of money on Bitcoin. Apple, Microsoft, Facebook, PayPal now, massive cash flow generators, right? The companies in QQQ essentially hold all the corporate cash in America. It's like 80% of it or something. You know, there's other companies too that we pick out for our plug and play list. You know, you got your Lockheed Martins of the world. There's other companies that have huge cash flow and cash reserves. But in general, that's the group you want to own. You want to own quality. So this is a little blurry on purpose. You can have it in the report. QQQ is too high. If it gets a small pullback, there's one buy zone. If it gets a big pullback, there's a different buy zone. ARC Innovation, showed you that chart a little while ago. This is where you need to be invested. This is where you have to be focused. This is the left-hand part of the barbell. This is what will win. Remember, this all underlies software too. So when people say, what about software? Well, that fits in with technology. And I gave an example to somebody yesterday. I said, look, you can invest in REITs. There's a legitimate reason to invest in REITs, but it comes down to location, and how much value add can they put into the real estate. There's no point in owning real estate because you want to collect the rent. There's a couple of services on Seeking Alpha and elsewhere. Oh, you want to be a landlord. Bullshit. How many of you are landlords? What a pain in the ass. You know what makes real estate investing easy? Good software and a good crew to do the work for you. That's where the big money in real estate is. The top real estate investments have been on the services side, not the landowning side. And there's exceptions, right? There are certain REITs, because of their strategy, they do real well. They take a B property and they turn it into an A property in a segment of the real estate market that needs more A properties. What type of real estate companies aren't going to do well? The ones that have a whole bunch of A properties, especially commercial, right? Commercial A properties, commercial real estate. And now you have less demand for that square footage. The biggest hospital system in Wisconsin just told all their employees, if you're working virtually now, you're pretty much going to work virtually the rest of your career. Not until the end of the year, forever. And you'll just come into the office for special meetings and training. That's it. They're going to be working from home 80 to 90% of the time now, right? Not the doctors, obviously, but all the administration for the healthcare system. Working from home 80 to 90% of the time. Ask yourself, why wouldn't that become the trend almost everywhere? You go to the office for training. Maybe there's one day a week where you go in for meetings and then other special meetings. That's how it's going to be. I specifically asked my girlfriend to get a job like that so that we can hang out wherever we want to hang out. Arc Innovation needs a big pullback down to near 100. Invesco Wilder Hill Clean Energy is another one of our core funds. We had started out with the solar ETF. This one actually did a little bit better, and it's more diversified throughout the clean energy. This is absolutely something, and it pays over a 1% dividend, so it's got a dividend. As this pulls back, you need to figure out a way to get into this one, no matter what. Yeah, is it bid up further than it should be? Sure, for sure, no doubt. Will it come down? Yeah. Will it come this far? Probably. Can it get all the way back down to here where it started? Maybe. I doubt it, but maybe. But it'll have a good correction at some point, and you need to buy it. You need to make this a pretty good hunk of your portfolio. Shamath, right? I can say it if I look at it. Palipatia, I know that's close. He and I agree that the change in the energy infrastructure is the biggest thing happening this decade. Biggest. Now, there's several choices here. I like emerging markets, and I like technology. So this is the fund that I would recommend if you're more aggressive. And there's a couple other choices if you're less aggressive or if you want dividends. But emerging markets, right, that's where the new consumers are. So there's a more diversified international version of this. It does just about as well, and you get more geographic diversification. And that's fine. You can use either one. The other one's still heavy in the emerging markets. They overlap like 40%. And then the Van Eck Gold Miners ETF. This pullback is a buying opportunity for those of you who don't own it. And this is a great one to sell cash secured puts on. You should just be pounding those $33, $34, and $35 cash secured puts, depending on how much you want to accumulate and what price you want to accumulate at. Could it go down a few more dollars? For sure. But this is already a pretty good correction. And it doesn't want to seem to get below this level, right? Support. Resistance becomes support. So you're really close to having a buy on the Van Eck Gold Miners. You need to keep this in your head, because as we get whatever we get in the markets, you have to gravitate towards this. You have to. And on the crypto side, again, I don't want you to invest directly into crypto, but I do think that you want to take some of your bank savings and put it into Bitcoin. Now, here's the risk. The risk is that I'm right and there's a digital dollar announced. And it'll just take the announcement to crush Bitcoin. But if I'm wrong and the United States never does a digital dollar, which seems far-fetched, then maybe Bitcoin gains more traction. But what I'll tell you is that I bet no more than 20% of the people who listen to this, and it'll be 1,000 or 2,000 at some point, have even looked at a Bitcoin purse, crypto purse. It's just unlikely that you're going to see widespread adoption of Bitcoin. And you've had a few companies go into Bitcoin, and this is where I think they're going to get crushed. Most companies and most of Wall Street, most of the banking system is staying away. Why? Because they know what I'm telling you. The digital dollar is coming. What most people don't understand is that it probably won't be based 100% on, it's not just going to be an extension of the Fed. That's what people are missing. They will create a reserve of this cryptocurrency, pretty much how you have to do it. And then they're going to peg it to something like inflation, probably inflation. And therefore, there will be a difference in the price between the digital dollar and the physical dollar. And the physical dollar will be subject to all the counter-cyclical policy that we need to apply over the decades, which means it will devalue. The digital dollar won't devalue other than at the rate of CPI or whatever they create to have a formula. But the digital dollar will be based on some sort of a formula, not the Federal Reserve Chairman spraying money. And because you can only buy digital dollars with dollars, that reinforces the dollar as the reserve currency. Corporations and nations at the big side will buy digital dollars because that protects them from devaluation. So they'll take their physical money and they'll convert it and they'll buy a digital dollar with it. Think of what that could do for a company like Apple. Now all of a sudden they have a guaranteed value minus inflation rather than being tied to a dollar that could get hit with helicopter money. So it's basically a shadow dollar, a shadow currency that's in the digital realm, built on blockchain probably, that allows instantaneous transactions versus having to go through settlement periods. And the ledgers can be overseen by the banking system. So you'd have all the banks in the world, particularly the US banks, everybody in the SWIFT system, would get the little itty bitty fees for monitoring the ledger. Think that through. Now all of a sudden the banks, you start to think, maybe the banks on a pullback would be worth it if there's a digital dollar for them to make money on clearing the transactions, being the ones allowed to monitor the ledger and get paid for it. Because the ledger is actually available to everybody. If you want to see Bitcoin transactions, you can do it. You don't know whose it is unless you can cross-reference, basically very advanced doxing. If you took a look at the Bitcoin ledger right now and you saw some giant transactions at about the time that Tesla was buying, you'd be able to trace, you'd have to do some inferring, you have to infer, but you'd be able to say, okay, well, they bought $1.5 trillion, trillions, billions, millions, lots of money. They bought Bitcoin, $1 billion worth, $1.5 billion worth. You can see those transactions. Doesn't have the name Tesla on it, but you would know that was Tesla. And if you saw other multi-million-dollar purchases, you would know those are either big traders, hedge funds, or institutions, companies. So the interesting thing about cryptocurrencies I don't think people understand is that it does leave a breadcrumb trail, right? Clearly, that's how it's designed. So while it was used initially for a lot of illicit things, if the government really wanted to see my Bitcoin transactions with the casino that I do a little bit of business with, they could figure it out. So this idea that it's completely invisible to the world is completely wrong. It doesn't have your name on the account, right? The public side of it doesn't. Somebody has your name. And it can be regulated. They could go to Coinbase and say, hey, this is what we need you to report every year. And they'd have to do it, right? So I'll finish with the Bitcoin there because I think it's a big story. Ultimately, the dollar is the most important thing to the American economy, and they will do what they have to do to protect it. Then again, maybe the U.S. government already stealthily is controlling Bitcoin. Maybe there's some sort of weird associations. So right here, this is from a Paul Simon song of millionaires and billionaires and babies. Maybe Bitcoin, there's something of an in cahoots with certain institutional investors in the government. I don't think so. I'm pretty sure there's not. But you can't discount things like that. You just put it in the back of the file cabinets in your brain and say, okay, I just want to be aware that there's a weird situation that could someday come up. So that when it does come up, you're not in denial. I don't think this one will. I think the U.S. government's going to crush Bitcoin by regulating it like a commodity and introducing a digital dollar. That's what I think is going to happen. But stranger things have happened than conspiracies. And remember, if you don't believe in any conspiracies, then the conspirators have won. There are conspiracies out there. Not too many, because nobody can keep a secret. And most plans don't work out for taking over the universe. But you never know. Keep your ear to the ground. And remember my grandfather's advice to me when I believe I was about 19 years old and finishing up my first year of college. Kirk, if you really want to know how things work, what's the answer? If you really want to know how things work, what should you do? 3 words. Nobody, Bueller, Bueller, Bueller. If you really want to know how things work, do what? Follow the money, Tom. Tom's there. Julia's there. Follow the money. Everything that we do in this service, everything that I do in my career, everything that I do with these investment letters and managing money derives from follow the money. Where is the big money going? That's why I show you the smart money, dumb money index. Follow the money, and you'll know how the world works. And you'll know how to get in front of things or at least get in early. You can catch pivots. You can. And sometimes there's no pivots to catch, so you ride a trend. But don't fancy yourself a superstar trader if you're not. And don't try to do superstar trader things if it's above you. Don't sit down at the poker table with 8 poker pros because you want to learn how to play. Unless you're really rich and you don't mind paying for it. Play the games that you can win. Mike Carroll wrote a book on poker. It was about how to read tells. Somebody asked him, how do you win at poker? You know what his answer was? Play with people who are worse than you. Pretty straightforward. The same thing applies in investing. Play the games that you can win and try to win them by a lot. Run up the score. So again, there are a handful of people out there who are superstar traders. Be real careful because you can wake up, limit down, and blow it up really quick, especially in a market that's driven by margin and options. Don't ever forget that story I told you almost 2 years ago now. Went out to New York to the Traders Expo. The smartest people in the world were there. Fundamental analysts, economists, government people. They couldn't fill up a 30-seat room. But you talked about cryptocurrency or option trading or futures trading. It was a packed house and they had to open up those sliding walls in the conference center. Everybody fancies themselves a superstar trader. And they can win for a while when the market conditions are right. But when liquidity dries up, when the big guys change the rules, when the government changes the rules, right? It's kind of the same thing. Big guys buy the government. Find out real quick you're not a superstar trader. Revisit 2000. Revisit 2008. We got it right. We got out of the stock market before the coronavirus crash. And we've been conservative ever since. And now we've been picking our spots along the way. And we did get gold and double our money on that, the gold stocks. But the very slow-handed ebb and flow trading, using the weekly charts, every single one of you can win at that. The shorter you make the time frame that you're trading, from months to weeks to days to hours to minutes, the less likely you are to win. Those weekly charts that I've shown you over and over and over again, you can hold those investments for months, sometimes years, and you don't have to worry about the pretend narratives, the fake narratives that you get blasted with. You can turn off CNBC, which is almost universally a good idea. If you want to watch financial TV, don't watch it in real time unless there's a real calamity going on or there's a guest you want to see. Get the Bloomberg app on your Roku or on your Amazon or whatever and watch the Bloomberg TV on demand and pick the things you want to watch. Set aside 2 hours a week to do that. That's what I do. I hardly watch TV at all anymore, financial TV, unless I know there's something I want to see. I don't need to listen to breathy people trying to create a story that day. I will tell you, the Bloomberg people are the best, hands down. That one British guy in the morning is off the charts good. The younger one, the bald-headed guy, right? That's how much I know. A Sunday morning, I get up early, and I turn on the Bloomberg app before Meet the Press, and I find the things that, oh, look, I want to listen to that guy. I want to listen to that topic. And then between Meet the Press and Face the Nation, I go back to Bloomberg, and I pick out a couple more things. Sometimes I skip Face the Nation because I already watch Meet the Press. They're almost the same thing. Although I've noticed now that Trump is out of office, the content's a little different again. It used to be all Trump all the time. Got tired of that too. What's coming here in the next year or two, I think is going to be like 2015 and 16. Again, it's weird to say this, but we might get lucky and get a giant correction. That would be the easiest thing to deal with. But I think we're probably going to have to work a little harder than that and buy things in groupings as they come along. I will have the ETF report out next weekend for the tactical purchases. I will have this report out this week. So that'll be a PDF that really dives in at the granular level. If you are a subscriber, you can get it. You'll be able to get it with a free library card at Fundamental Trends. And we will talk a little bit more in the coming week as I release on time, finally, a Macro Monday article that will be published not only behind my free paywall, but I'm going to start publishing it on Medium. It'll be on Seeking Alpha. I might even have it on investing.com and Benzinga. We'll see. And then there'll be excerpts on Market Watch. And in fact, it might be excerpts that go to the broad media. And one of the things that we're going to really focus on is the changing liquidity structure, because it's so important that you know that any asset, any economic model is based on what? Supply and demand. So if demand increases because there's more money out there, and the supply of investments remains relatively constant, right? It pulls prices up. But what if liquidity falls? That's what you got to keep your eyes out on. So get your free library card, the Fundamental Trends, if you don't already have one or you're not already a paying member, because you get our special reports. All right. Have a good day, everybody. I am going to get the Hulk, do a little grandpa sitting. Have a good weekend.